Why you should consider investing in blue-chip companies. Are you looking for reliable and long-term investments that can bring you steady returns? If so, then blue-chip companies may be the right investment option for you. Blue-chip companies have a proven track record of providing investors with consistent returns over a long period. In this video, we'll discuss why you should consider investing in blue-chip companies and what advantages they offer compared to other types of investments. What are blue-chip stocks? Blue-chip stocks refer to the stocks of well-established, large companies that are recognized as major players in their respective industries. These companies are typically characterized by long histories of profitability, dividend payments, and financial stability. Blue chips are often considered some of the safest investments on the market since they tend to be less volatile than smaller companies. They are also known for their ability to grow in value over time and pay dividends to their shareholders. This makes them an attractive option for many investors who are looking for both short-term gains and long-term security. Examples of blue-chip companies include Apple, Microsoft, Coca-Cola, IBM, and McDonald's. The benefits of investing in blue chips. Blue-chip stocks offer several advantages over other types of investments, making them attractive to investors. Blue-chip companies are established and well-known companies with a track record of success and steady growth. As a result, blue-chip stocks are generally considered to be more reliable investments than other types of stocks, with a lower risk of loss. Another advantage of investing in blue-chip stocks is their relatively high dividend yields. These companies typically pay out larger dividends than other companies, making them an attractive choice for investors looking for regular income. Furthermore, blue-chip stocks are often more resilient to market downturns, which means that they can provide a steady stream of income during tough times. Finally, blue-chip stocks tend to have strong liquidity, meaning that they can be easily bought and sold at any time without large commissions or fees. This makes them ideal for those who want to enter or exit the market quickly without having to worry about large transaction costs. Things to consider before investing. Before investing in blue-chip stocks, there are a few important things to consider. The first is risk tolerance. While blue-chip stocks can be seen as relatively safe investments, they still involve some degree of risk. Make sure to assess your risk tolerance and understand the potential risks associated with investing in blue-chip stocks. Next, consider your budget. Investing in blue-chip stocks requires a certain amount of capital upfront, so make sure that you have sufficient funds available before making any investments. It's also important to look at the individual companies you're considering investing in. Research each company thoroughly, including its financial history, growth prospects, and competitive position in the market. This will help you make an informed decision about which companies to invest in. Finally, consider your investment timeline. Do you plan to hold the stocks for a short period or a long period? This should influence your strategy for buying and selling the stocks. Taking the time to consider these factors will help ensure that you make wise decisions when investing in blue-chip stocks. How to get started. Investing in blue-chip stocks can be a great way to create long-term wealth and security. If you're ready to get started, here are the steps you should take. 1. Research. As with any investment, it's important to do your research before investing. Look into a company's financials, including its revenue, profits, and other key metrics, to make sure it's a good fit for your goals. 2. Understand risk. Investing always carries some level of risk. Before investing in a blue-chip company, understand how much risk you're willing to take on. If you're risk-averse, consider investing smaller amounts into a variety of blue-chip companies to spread out the risk. 3. Choose a brokerage. Once you've identified some blue-chip stocks to invest in, you'll need to choose a broker or brokerage platform to purchase them through. Look into their fees and other features, such as their mobile app or educational resources. 4. Make the purchase. After choosing a broker, you can purchase the blue-chip stock or stocks that you've chosen. You may need to pay additional fees depending on the broker, so make sure to read up on those before making your purchase. 5. Track your investment. Once you've purchased the stock, keep track of its performance over time to ensure it is meeting your expectations and goals. Many brokerages offer resources for this purpose, such as automated notifications about changes in the stock price or earnings reports. By taking these steps, you can confidently start investing in blue chip stocks and build long-term wealth. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.